July 30th, 2024. Today was an outside down day. If you were watching my video yesterday, you'll, remember that I mentioned, our first breakout of this inside pattern. First off, first thing I had to mention was inside patterns, like Al says, are just triangles on higher time frames. So you can see we basically just formed a triangle over the past few days. And when you form this type of a triangle, the odds of a breakout are relatively 50-50. And the breakout, it has generally about a 50% chance of failing when you first get it. So you can see that we broke above yesterday's high, which was the second consecutive inside bar on the daily chart, and we failed and we got a big reversal down. I think I just said this, but I'll say it again. Outside down days have a 70% chance of closing in their lower third, and outside up days have a 70% chance of closing in their upper third. So whenever you're getting this sort of outside day, you should generally be expecting that. Tomorrow is also a Fed day, so I will not be doing a daily review tomorrow. I was considering making some sort of video on high ones and high twos and just like bar counting basics or something along those lines and context within bar counting basics, maybe something along those lines. So I don't know. I'll see how I feel tomorrow if I feel like making a video, but if I do, it's probably going to be on high ones and high twos and low ones and low twos, something along those lines. Bar one, a bull bar, but a big tail on the top and a big tail on the bottom. Again, the context of the day, you should have the prior day's high and low marked, especially in a situation like this, or at least just be aware of them. You don't have to mark them. But the context of the day, is calling for some sort of breakout attempt of either the high or the low. Remember, when you get consecutive inside bars, there's only about a 20% chance that you're going to get a third inside bar. So most likely, we're going to either try to break out above the prior day's high or break below the prior day's low. We are much closer to the prior day's high, which leads me to believe that is what we are going to try to do. Bar two, consecutive bull bars closing near their highs. Good for the bulls. We're probably going at least a little bit higher, but I'm not sure how much higher. It's not, are we always in long? I don't know, maybe from the gap, but it's not all that strong. The bulls need to do more. I'm not willing to buy until we get a breakout above the prior day's high and clear follow through. Usually when you trigger some sort of buy signal on the daily chart, the market has to pull back first. So this obviously here reversed, but if this breakout was going to work and it traded up above the prior day's high, usually it'll have to pull back to that high before it can continue higher because it is a signal on a higher time frame. And like I said, higher time frame signals usually require pullbacks. Bar three, a failed breakout above yesterday's high and a reversal down. What are the odds this is the high of the day? Well, if three closed on its low, it was a very credible sell for a possible high of the day. However, it ended up having a really large tail on the top. So that decreased the odds that bar three was going to be the high of the day. I think the context was really strong, a failed breakout of the prior day's high in an area where, in general, we're going to be a little bit more bearish, right, in here. So you're expecting sellers somewhere above the July 29th bar. You're not sure how far above. Did this close? I just want to check something. Okay, so we got 2 ticks away from the prior day's low, or the low of the month. Interesting. But anyways, bar three, like I said, big outside down, but really disappointing close. So I do think that we're probably going to go at least a little bit lower, but that is definitely not the bar that I wanted to see. I was hoping that it was going to close on its low, and that would be a credible sell for a swing to at least the prior day's low, betting on some sort of outside down day. Bar four, it's consecutive bear bars, but there's a huge tail on the top and bottom of three, and there's a big tail on the bottom of four. So to me, this is a trading range open. I don't think the always in direction is all that clear. Like I said, the gap and these two bull bars make me think we're probably always in long, but the context of the failed breakout of the prior day's high makes me think, the context might be more always in short. Again, the bars with the gap might be always in long, but sometimes when the market is always in long, the context is always in short. And that might be one of the situations here. Usually, I think there was the same it was a much better example of that down here where we had consecutive sell climaxes, 1, 2, 3. Generally, when you get consecutive sell climaxes, I'm actually going to, okay, there we go. Well, first off, I was looking through these this morning, and you oftentimes get a reversal or a reversal attempt before bar 40. You can see before the midday reversal attempt 30, and then channel up, This isn't a good example. There's one specific example that I wanted to go through. I'm trying to find it. Might be this one. Yeah, reversal up around bar 31, 32. So something like that, consecutive sell climaxes. So we again today got consecutive sell climaxes on the open. And when we've sold off this much, this many points, 80 points in 40 bars in the first half of the day, we're probably not going to sell off another 80 points. So a lot of times you get a reversal up that tries to test the top of the bear channel, which is exactly what happened. The bar 24 high is the top of the bear channel. And the reason that this happened on 76, first off, we had open gaps, right? Yesterday's low. The bulls who bought below yesterday's low were not able to get out immediately here, so they had to get let out, and that ended up happening over here. Bar 76 was testing the gap between the bar 18 low and the bar 24 high. So 76 was filling in gaps, and that's mostly what was happening there because this evolved into mostly a trading range. But anyways, my main point is that when you get a sell climax, consecutive sell climaxes, you oftentimes get a reversal up. Is bar 45 enough to make me think the market is clearly always in long? No, but there's no way I'm selling or staying short if you're short on 44. Sorry, I meant 44, not 45. 45 is a good buy because you're betting that we're going to start some sort of tight channel up and rally back up into this area. And your risk reward is pretty good. So you can basically bet that we've seen the low of the day, take the buy, and look to get it up to the bar 23 close, which is probably going to be a magnet. And a lot of times, with this specific pattern, if it's going to rally up to that sell climax high, or that channel high, it'll do it rather quickly, or in a pretty painless fashion, like it did here, where it moves pretty quickly. And a micro channel essentially. So a lot of bull bars, not all of them huge, but a lot of bull bars in general is my main point here. So 5, another bear bar, but a tail on the bottom. So tail 3, tail 4, tail 5, not really all that good. 3 straight bear bars, so probably the first reversal the first reversal up is not going to be all that strong, but really probably just better to wait, to be honest. If I had to be anything, I would probably be short. If I had to be anything here, I would be short, but nothing is all that likely at this moment in time. Excuse me. Bar 6 is a lower low double bottom with bar 1. So first bottom and then second bottom, lower low double bottom. The neckline is the 3 high, but you're basically buying the middle of a trading range. I don't want to buy. I guess a couple ticks away from the middle of the trading range, but there's really no rush. The daily range is going to expand. And again, that failed breakout of yesterday's high was really important for the bears. So I'm really not willing to buy yet. I would rather see, a deeper pullback and then some sort of reversal up before looking to buy. 7, an outside down bar, good for the bears. Big outside down. We're around yesterday's close, so we might end up going a little bit lower. Bar 7 is strong enough to get a second leg sideways down, but it's really, it's really hard to sell the close of 7 or look to sell anything in here. 7 is such a big bar that the following bar is probably going to be an inside bar, which will create an IOI pattern, 6, 7, 8, which is a breakout mode pattern. And if we're in breakout mode, we're most likely going to end up, if we're in breakout mode, we're probably, generally 50% chance the first breakout's going to fail. And again, no one wants to, it's a theoretical sell below 8 and 9, but I don't really want to take those shorts. I think that it's probably a lot better just to wait and see what happens. 8, an inside bar. So we do get the IOI pattern. Buyers below 6, scaled and lower, made money. So I think everyone pretty much on limit orders is making money so far. 9, an inside bar, another inside bar at least. So we have IOII. Again, it's still a breakout mode pattern and we might go a little bit lower, but I'm not sure how great this is for either side. I really don't want to sell and get caught in a reversal up, and I don't really want to, be too early and try and front run a buy and just have it turn into an endless move down, which is what ended up happening. I think 18 changed a lot of things because we had a wedge here, 1, 7, 14, and we got the measured move down of the wedge to this area. So that's what we were oscillating around there. There's other, whenever this is kind of one of the measured moves I used to always look at. So I just kind of see it a lot, but you can see this whole leg down, the 16 high all the way down to the 20 low is the exact height of the bodies of the second leg down. So leg 1, pull back leg 2. And generally when you get a spike in channel, the initial target is, basically the to spike, like down here. But you can make an argument for a leg one, pullback leg two. So sometimes the measured move of this doesn't come directly down, comes more in a spike and channel fashion. Anyways, bar 10, an outside down bar. So again, an outside bar, but does this look like a bear trend to you? You know, it's a tight channel down, which is good for the bears, but it doesn't really look all that bearish yet. I'm not all that bearish yet. If I was, you know, if you're short in here, you're probably getting out above any one bull bar, which is really means, you know, it's not really as bearish as it could be. We don't really have any good looking bear bars closing near their lows. We have a big bear bar, and this one closes kind of near its low, but we don't really have any bear bars closing all that strong. So to me, this looks like it's going to become a trading range open. Obviously, it did not, but I thought the odds favored some sort of trading range. Probably buyers below 11. Probably buyers below 10 during 11. But again, you don't really want to buy below a bear bar. It's just probably a lack of bears willing to sell. So we have 3 consecutive bear bars, 9, 10, 11. Good for the bears. We are always in short. I think 7 made the market pretty clearly always in short, but it's probably more of trading range always in short at that point. So I'm not really willing to do anything. When you get an inside bar on bar 12, you know, you can take it. You're hoping basically that we're going to get a breakout below like we did. So what we got is your best case scenario if you're selling below 12. But if you're selling below 12, you're probably not going to be right all that often. The good thing about selling below 12 is, you know, you probably have to put a stop above 10, but it's pretty simple management in that if you get a bull bar closing near its high, you can just get out of the trade. But I think you're selling lower in a potential trading range than I would personally like to sell. So you get a follow through bar on 13. Good for the bears. We're probably going at least a little bit lower. Consecutive bear bars closing near their low. We are always in short, and we have had 5 straight bear closes. So I do think we're going a little bit lower, but how much lower? Are we going that much lower that I would like to sell the closes of bars? You know, not really yet. For me, I think 13 is a breakout attempt, but I'm not really sure how good it's going to be. And then you get disappointment on 14. You can see. So 14, it's a wedge, 1, 7, and 14. Bears want a breakout below the wedge and a measured move down, the wedge measured move that I showed. What are the odds of that happening? You know, I don't know. At this moment in time, when you see bar 14, maybe 40%. I thought it was more likely we were going to end up in some sort of trading range here. I wasn't against the idea of us going down today. I thought, you know, after the failed breakout above yesterday's high, we probably would go down today. But I was not all that convinced that we were going to go. We were going to go straight down after I saw 14. So 14, what do you do? Well, you know, probably nothing. Some bears will just sell the close of the bar and hope something like this happens. I mean, this is a trade that I'm, you know, think that. Sorry if that was loud. I think that the math makes sense to do this, but it's just not like a very good trade. But I'm sure there are some theoretical algorithms doing this where if you're getting some sort of spike down and then you get this deep pullback bar, what they'll do is they'll sell the close, and it's tough to put a stop above because if it trades above it, you don't want to be the guy buying back shorts above the bear bar. So the context of this kind of thing doesn't really make sense. But if you sell this close enough times, risking 1 or 2 points, trying to make 8 or 10 points, you'll probably end up at least breaking even. And I assume it's a profitable thing to do. I noticed that today, and I've been looking at that over the past couple of days. Something like here, they sell the close. Again, I don't know, but here you would get trapped, right? So I don't really know if it's not really a great idea, but it's just something, in theory to think about some traders would do. But the math would make more sense than the context would. So it's really not as good. You want to take trades where both the math and the context make sense, not just where the math or the context makes sense. An example of a trade where the context makes sense but the math doesn't would be just starting to buy in here, betting we're going to have a trading range. So you just buy below 11 and you say, well, this is probably going to be a trading range. And you're right, it probably is going to be a trading range, but where's your stop? How are you structuring it? Where are you scaling in? When are you getting out? So, it's okay to think in here, yeah, we're probably going to bounce. It's probably going to be some kind of a trading range, but it doesn't mean you can just buy at the market. And the opposite, example where the math would make sense, but the context doesn't, would be exactly what I just said. So an inside bar 15, it's still a wedge, 1, 7, 14, but I don't think I'm really willing to buy above bar 15. It's a doji bar and it's a bear bar. So we still have 6 straight bear closes at this point. So I'm really not all that keen on buying. I would rather wait for some sort of second reversal up. At this point, what I think is going to happen, I think we're going to start to go sideways. If I'm going to buy, I would like to buy a bull reversal bar up from lower after maybe one more new low. 16, you can see we got a failed breakout above the high of bar 15, and it turned into a doji bar. So again, we have consecutive dojis, 15, 16. In general, when you get doji bars in, sell to close, because this isn't great sell to close, but, theory, sell to close 12, 13, and then we have 3 doji bars. So usually when you get a doji bar in a sell to close trend, the market is going to start to go sideways relatively soon. So we're stalling in this area. 17, probably buyers not too far below 16 because it's a low one at what is probably the bottom of the trading range. Still a reasonably tight channel down, so potentially a breakout on a higher time frame, but I'm not sure how strong of a breakout it would be because if you look at the bars, they're not really all that great. You can see on a 15-minute chart, still big tails, still big tails, still big tail. So not as strong as it could be, and ended up having to get a lot stronger. And you can see on this time frame, it's 1 pullback, 2 pullback, 3. So the pattern looks easier on this chart, right? The consecutive sell climaxes are just manifesting as a wedge on this pattern or on this time frame, and so that's how you should think of consecutive sell climaxes, as a wedge on a larger time frame, and that can lead to a reasonable swing up because on that larger time frame it's a wedge, which should lead to 2 legs sideways up on the larger time frame. So you would expect to get two pretty strong legs sideways up like you did here. I don't know if we got any sort of even leg 1, leg 2. We probably didn't. Doesn't seem as big. Yeah. I think bar 18 changed a lot of things. It's a bear bar. It's not quite closing near its low. However, it does close below the breakout point, the bar 14 low. So when 18 closes, we are now at a decision point. Either the bulls are going to give up and we're basically just going to get a dump like we got here, where it's 1, 2, 3. It's a breakout below the wedge. We're going to get a measured move down. Or we're going to get a reversal back up and a failed breakout below the wedge. Usually it's pretty 50-50 when you break out below a wedge, whether it's going to work or not. The stop, there was no good stop order for the bulls in here. So that reduced the amount of bull stop losses that would be down here. Usually if you have an area where it was pretty reasonable to buy and then the stop losses get run, the odds are increased of some sort of measured move down. And then you get bar 19, a huge bear bar closing near its low. So 18, 19, really large. Can you sell the close of 19? Yeah, but you have to have a pretty wide stop, probably at least above 18. Realistically, you can put your stop above 19 because if we get all the way back up here, you should have been out a lot earlier. But the theoretically correct place for your stop is above the prior lower high, which would be the bar 16 high. So while you can sell the close of 19, you're risking a lot. And you also know the market is probably going to pull back. So it's okay to be short. We are always in short very clearly, but this is a very climactic bar and you're selling very far from the moving average. You can see we broke far below yesterday's low and we ended up creating an open gap. So at this point on the close of bar 20, the question everybody is asking is, are the bulls who bought below here and are scaling in lower going to be able to make money? And if they are not able to make money, it increases the odds that we are going to get a sell-off. So this gap remaining open makes 24 a better looking sell than it would be if the gap had closed, and the same thing with the follow through bar 25, 26, etc. Bar 20 is follow through for the bears, but again, a big tail. Now, if you sold 19, you probably had to expect that the follow through was not also going to look like 19. It's pretty rare that we're going to collapse that far below the moving average. And that might have potential to turn into a really, really climactic sell climax. So again, you can sell down here and it's fine to do, or you can just wait for a pullback and look to get short there, depending how the pullback looks. Probably sellers above 20 somewhere. I'm not sure how far above. We are a little bit oversold, so we're probably going to get some sort of pullback, but I'm just not sure how deep it's going to be. 21 triggers the high one buy above 20. Obviously, it's not a very good high one. You do not want to buy above a bear bar, even if it's closing in its upper third. But you can see probably sellers above scaling in. And if, let's say, bar 20 is a quote unquote, it's not a good sell to close bar, but some algorithms will sell that close and they'll scale in higher. And you can see on 22, when we got back to the bar 20 close, that's really all they wanted. All they wanted of the trade. So if they sell, they know we're either going to go down, or as the market rallies, they'll scale in higher, knowing that it's going to come back down to the bar 20 close, because this is so dramatic. And so we're definitely going to get back into this area. So 22 is mostly due to bears taking profits. Do you buy above 22? I would not. This is a breakout, and we might be forming a trading range, and you don't know where the top of that trading range is. And first off, that we're not going to get all the way back up here, right? So if you're buying above 22, you're risking 13 points. And, I guess your best case scenario would be we get all the way back up here, but it's not going to go very fast. So you're risking 13 points trying to make 15. And your probability really isn't all that good. Additionally, we have this low where if we get back to this low, the bulls who bought and scaled in are probably going to take some profits. So for me, your risk is pretty big and your reward's not all that good. So you might be buying higher in what is probably a developing trading range than you think you are. So this is a 3-bar tight trading range, 20, 21, 22. So you're buying with bad math high in a tight trading range on 22. It's a high 1 buy for the bulls because it's an inside bar. So if you're buying here, you're betting that this is some sort of successful bull breakout and you're buying the first high 1. And it's really not a very successful bull breakout. There's only one good looking bar and the context of it is terrible. So it's not surprising when you get disappointing follow through. 23, the doji bar. 24, a bear bar closing near its low. Can you sell below 24? Yes, 24 is a low one in the spike phase of the bear trend. So it's okay to take low ones when you're in the spike phase of the trend, and you can sell below 24 since we have that open gap with yesterday's low. That increases the probability, like I said, that we're going to go down for some sort of measured move. We have a spike and a pullback. So if you're selling 24, you're betting we're about to get some sort of channel, and you're hoping you're going to catch the channel. 25, consecutive bear bars closing near their lows. Good for the bears. We're probably going at least a little bit lower. There's a very large tail on 25, so it tried to rally back to the bar 23 close, but traders ended up deciding to exit early, and that caused bar 24 to be a bigger bear bar closing near its low. 26, another giant bear bar. So bears selling, we're getting to the new low. And as we break below the new low, the question becomes, are limit order bulls who buy below bar 20 and scaling lower, are they going to make money? Which you can see they did on 32. And I thought that was really important. It increased the odds that this was some sort of sell climax pattern, and we're probably going to end up getting a reversal back up. So 24, 25 consecutive bear bars closing near their lows. If you did not want to sell below 24, you could have just waited for follow through, which you got on 25, and now you have it. So you can just sell below that. 26, a big bear bar, but a big tail on the top, so not as good as it could be. 3 straight bear bars with one being really big. 26 is climactic, but again, we're probably going lower. It's still a climactic bar, but we are probably going lower. 27, another bear bar, but a tail on the top and a tail on the bottom. Not sure how much lower we're going here without starting to bounce at least a little bit. And then you get a doji bar on 28. In general, like mentioned earlier with the situation with bars 14, 15, 16, and 17, when you get some sort of sell climax, some sort of sell to close bear trend like 24 through 27, and you start to get doji bars, there's an increased chance that the sell to close is coming to an end. So 28, doji bar, we're probably going to start to go sideways relatively soon here. 29, another doji bar. So 28, 29, we have consecutive doji bars, and that means that we're probably coming to the end of the sell to close. Some traders, what is this 32? I think it's bears just realizing we're probably not going to continue all the way down, and they buy back shorts at the market. So that's probably what's causing that. But 30, a bear bar closing near its low. Good for the bears, but it's not a very big bar, and you're selling probably low in a developing trading range. I don't know where the top of the trading range is going to be. But with all these dojis, I can't imagine we're going much lower. So we might be getting close to a potential bottom of the trading range. An outside bar, 31. At this point, if we're going to go lower, it's going to be an abrupt collapse. So the moment we start to rally, a lot of traders will just exit. I think that's what causes 32. Once you get 32, I'm probably all done selling. I think that I would rather wait and focus on taking the buy. So it's okay to miss this. 39 was a reasonable low too, for sure. It's a lower high double top, and you can definitely sell 39, 40, 41, 42. And there's no problems with doing any of that. It's all reasonable things to do. But the thing you have to remember as this is falling is that the limit order bulls who bought below 20, they made money. So the limit order bulls who buy below here are probably going to make money too. This is extremely climactic move. So we have a climactic move, pullback, climactic move, pullback, climactic move, consecutive sell climaxes, and a breakout attempt below a wedge. So it's the spike in the wedge channel, 1, 2, 3, or 1, 2, 3. So a spike and a breakout attempt below the wedge channel. So there's a lot of reasons why this was probably going to end up failing, and you're going to get a reversal up. 33, probably sellers not too far above 32. You can see the bulls are trying to get a reversal up here. We might have to get one more leg down. That can happen because 24 through 31, that's still a lot of bear bars. So it's probably not going to go straight up. We're probably going to go more sideways to up, at least to begin with. 34, the doji bar. Buyers below 33 during 34. 35, a big bear bar closing near its low. We're breaking to a new low, yes, but let's see the follow through. 27, 31, 35. This is a wedge. So 36, a bull bar closing near its high. This is a possible midday reversal. It would have been credible to buy above 36 if it had closed stronger, if it had triggered. But instead, you get a tail on the top of 36. So it's not as good as it could be. What do you do at this point? Probably nothing. Again, you can buy above 36 if it triggers, but if you're buying, you're hoping to get at least a bounce to the bar 23 high, and you're betting on some sort of trading range. The third sell climax at this point, it was possible at this point. We already had consecutive sell climaxes, but they weren't as clear as they ended up becoming. 37, an inside bar, a low one short. It's a high one for the bulls and it's a low one for the bears, but I do not want to sell after bar 36. 36 is a reasonably big bull bar. It makes me think if we do go lower, we're probably not going that much lower. And then you get an outside up bar on 37, which is not all that surprising. On 38, which is not all that surprising. It could be two legs up. So the bears see one, pull back two, and a low two short, 39. The bulls are hoping we've started some sort of bull trend. And this is the end of the selling, and we're going to start some sort of rally, which ended up coming after one more leg down. But if that's going to be the case, we're going to start to get bull bars closing near their highs here. So it's probably better to just wait. 39, a bear bar closing near its low. It's a low two short. This probably shouldn't happen if this is going to work or if this rally is going to work. We weren't even able to get to the moving average, and we're already forming a credible low two. So that's really not all that great. It's, three consecutive. It's kind of a head and shoulders here. It looks kind of like it. But really, it's three consecutive attempts by the bulls to fail is really what's important. I don't know if this is higher than. Okay, so these are the exact same high. So left shoulder, head, right shoulder is probably a reasonable thing to think. Spike, and then pull back, and then maybe some sort of channel, but we ended up getting another spike. And it's a breakout below the wedge. So when you get a breakout below a wedge, what's the target? A measured move down, somewhere down here, which we did not reach. So low two short 39 is a reasonable swing trade. It's a small bar, so small risk, and you're taking a chance and you're going to make 15 to 20 points selling below 39, risking 4 or 5 points. So while it might not be all that likely that it's going to happen, it's a credible thing to do. So always in short, bear bar closing near its low 39. Consecutive bear bars 39.40. So still always in short, consecutive bear bars closing near their lows. We're probably going at least a little bit lower. I'm not sure how much lower. You can see we got a breakout below the wedge, or we're going to attempt to get a breakout below the wedge channel. But even if you don't think we're going a lot lower, a lot of times the market can go much further than you'd expect. So when you get consecutive bear bars closing near their lows and you're in a bear trend and it's always in short, it's always okay to sell. 41, a big bear bar closing near its low. You can sell 41, 42, but my problems with them is that they're very climactic. And again, the bulls who bought below 20 made money. So I think the bulls who buy below 35 will most likely also make money, since trends tend to get weaker as they go on and not stronger. So 41, 42, consecutive bear bars closing near their lows. 4 straight bear bars. We're always in short, but very climactic. And we have clear consecutive sell climaxes 18 through 20, 24 through 31, and 39 through 42. So 3 straight consecutive sell climaxes. 43, a reversal up, but a tail on the top, right? So I don't really want to buy above 43. I think I would rather wait and see if we get follow through. The context here is really good for the bulls because it's consecutive sell climaxes, possibly a failed breakup below a wedge. So traders are looking to buy, but I'm not going to, I don't personally want to take a chance and buy above 43 when I know that if this is going to rally, we're just going to get another good looking bull bar. So I would rather just wait and see if 44 can be a bull bar closing on its high. It needs to basically be a perfect bar for me to buy because if this is the start of the move that I am expecting to happen, then it's going to be pretty strong. And this move's probably going to go a long way. So I don't really want to buy if the first couple bars are not very strong, because that makes me think if it's not perfect, well, why aren't the bulls able to get strong bull bars closing near their highs? 44 consecutive bull bars. We're probably still always in short from the bars, but I think the context is always in long here with a bull bar closing near its high. For now, I think, the selling is over and I think you can buy, looking to get some sort of channel up. 45, another bull bar, but big tail on the bottom, small tail on the top. Again, it's still 3 straight bull bars. I don't know if we're going to get some sort of pullback. I don't know how it's going to look. We shouldn't get a big bear bar closing near its low if this rally is going to work. And the most recent sub-climax high is the bar 41 high or the bar 39 high, whichever you would like to use. And then 41 is climactic, so you could argue that this is its own sub-climax. And 45, you can see we have an open gap with the bar 43 high and the bar 45 low. So the limit order bears who sold above bar 45 or bar 43 during 45 did not get filled on their scale-in. Sorry, have not gotten filled yet back at this high, and they're currently trapped by the close bar 45. 46, another bull bar. So we have tails 45 and 46, but still 4 straight bull bars. We're probably going at least a little bit higher. 47, another bull bar, a tail. It's a failure at the moving average, yes. Test of the bar 41 high, that's sell climax high, yes. But I still think we're not going down. And if we do go down a little bit, there's probably going to be bulls, ready and waiting to buy below pretty much any of these bull bars, which is what happened on 47 or 48. But 48 did something really interesting. So if you're a bull, let's pretend that you see 44 and you're thinking, I really want to buy, but I'm not quite sure yet. And you see 45 and you're still not sure. And then once 46 closes, you say, okay, it's 4 straight bull bars. It's pretty unusual to get 4 straight bull bars and then not get some sort of really strong second leg. So now I want to buy, except I don't want to buy above 46. I want to buy at the price that the bar 44 traders bought at, but now I have more information. So what they're going to do is they're going to set a limit order to buy at that same price. One tick above this high would be 54, 51.25. And you can see we came within 1 tick of that price. So this isn't actually. So the high of this 25 and the low of this 50. So we got back to the exact price, but to not overlap it. But some traders, they'll buy whatever 2 ticks above. But the point being, 48 sold back off, and it was a test of the breakout point, which was the bar 46 high. So it's the swing point, whatever you want to call it. It's a test of that, and then a reversal back up and a bull bar closing near its high 48. So this shows you that bulls regretted not buying, and they were trying to get filled with more information. Some of them did. It touched the exact low. It didn't quite go below it. So the traders who held and only kept their limit order at that 1 tick above the high, they weren't quite filled, but anyone that was any higher than that did get filled. So a lot of bulls filled, but some still might be trapped out. After this many bull bars, 5 straight bull bars in a tight channel, there's going to be buyers below 47 during 48. So a high 1 bull bar 48, we're probably going higher, reasonable to take the buy above 48. 49 consecutive bull bars closing near their highs. I still think we're going higher. I'm still pretty convinced we're going to get back up to around the bar 23 close. I'm not really sure how it's going to look. We might have to pull back along the way, but I still do think we're going to go higher. And then 50, a bit of a climactic bar, a tail on the top. You can see that we traded back up towards the top of this trading range here. So this is a tight trading range of final flag, a breakup below, if it'll break up below the final flag, and we reverse back up into the area. So it's not surprising we got a climactic bar and a little bit of profit taking in here. But nonetheless, still a big bull bar and a lot of straight bull bars. There's nothing to sell. 51, an inside bar, a high 1 for the bulls, closing near its high. So you can buy above 51. High 1, taking a chance we're getting up here. But you can notice the trader's equation is getting worse. 52, another bull bar, unable to break strongly above the bar 50 high. But again, 5 bar micro channel for the bulls and, what is it, 11, 10, like 10 straight bull closes, 9, 10 straight bull closes. So there's no reason to sell here. We're continuing up. 53, a bear bar, closing not quite on its low, somewhat near its low though. It's an inside bar. Do you exit below 53? I think a lot of bulls will, not because they think that we're not going higher, but because they have a pretty good profit and we could start to pull back and they could just look to buy a high 2 or something. So other bulls will buy the close of 53. One of the problems with buying up here was that if you're buying above 52, or let's just say you bought, buying the close of 52 to make it easier. Let's say you're buying the close of 52, your stop has to be below 48. So you're risking 16 points trying to make 10 points. Traders don't want to do that. So what they'll do is they'll buy the close of 53 during 54, and they'll just put a stop right below 53, figuring it's okay to get out below bear bar closing near its low. And they're only risking, 1 point, but they're trying to make 13 points, and they think it's likely we're going to get back to this magnet. We might have to trade below 53, and they might get stopped out and then go, and that's okay. But the math is better because there's more than a 10% chance that we're going to get there, and so the traders are willing to buy below that close. And even if it is 10% chance, it's still a profitable trade. So reasonable to be buying the close of 53. And what they're hoping basically is when 54 rallies back up to the 52 close, bar 52 was by the close bar, but it got a pullback. So traders are hoping that instead of exiting around the bar 52 close, traders will end up buying more. You can see initially during 54, traders exited. So that's a little bit disappointing that there's the tail on top of 54. 55, an outside down bar, but the big tail on the bottom and the big tail on the top. Actually, 1 second. I actually want to check how big this day was. Was it 94 and a half? Okay. Really interesting. Literally 5% off the highs. 4.8, something like that. Anyways, so at this point, when I get 55, it's a second reversal down. You don't have to exit below 55, but it's still a second reversal down. And I think once we trade above 55, if 56 were to go outside down, then I'd rather be out. So if you're long, once we traded above 55 during 56, I just put my stop below 55 because the magnet is pretty close, right? So on the close, we're you're trying to make 9 points, you're risking 5 or 6. So the math is still pretty good. And I still think, 50, 60% chance for getting there, and you have better than 1-to-1. Sorry, I think 60% chance for getting there, and you have better than 1-to-1. 57, follow through, a tail on the top, and then we get a climactic bar 58. It's good for the bulls. You can see we're testing the channel high basically on 58. We might have to fill in the gap, like I mentioned. I thought we were going to fill in the gap. I was surprised we did not do that on 59, and I was curious as to if we were going to do it later in the day, which we obviously did. But we might have to try and fill in the gap. The problem is that no one wants to buy above 58 trying to make, 4 points, 3-4 points. No one wants to take the buy way up here. The edge is already gone. The buys were in here. So no one quite wants to take the buy above bar 58, just betting that we continue way higher. A doji bar on 59, so disappointment. We're probably going to start to go sideways to down pretty soon, I would imagine. It doesn't mean we're going to go down, but again, I think it's just going to go sideways. We have this is a leg in a trading range, and this is a leg in a trading range. So it looks like to me we're starting a trading range here. 60 buyers below 59 after 4 straight bull bars makes sense, but this is overbought. It's not as good as buying down here below this bar when you're expecting a lot more to the upside, because here you'd be buying for just some sort of second leg up, and you're really not sure how good it's going to be. 61, an inside bar. It's a low one short for the bears, but it's not worth selling anything. There are probably sellers above since 60, 61 consecutive bear bars, but we're still going to remain always in long. So it's not really that great to sell above 61, but some traders will, and you definitely can. 62, a bull bar triggers the high one above 60 for the bull, or above 61 for the bulls. But I don't think we're going that much higher here. I would imagine there's probably going to be sellers around the bar 59 close if we get there. An inside bar 63, a bear bar. Do you sell below 63? Nope, it's possibly just a second leg down. Where are we going to test down to? Well, you could argue that bar 50 was a spike, so it's its own spike, and 51 starts the channel. Because 50 is a climactic bar, it's also a breakout. So it's a breakout above the channel from 45 to 49 on bar 50. And so 51, when you get the pullback and the big tail, that's now the start of a channel. If we look at a lower time frame, we'll just use these 3 bars. Make it easy and look at a 1-minute chart. It's probably going to be some sort of spike in channel. You can see the spike and then the pullback and the channel starts. So again, look, this is a spike and then pullback and then the whole channel, and look where we tested back down to the bottom of the channel, right? Because channels are magnets. So channel lows, the low of a channel, the low of a bull channel is a magnet, and the high of a bear channel is a magnet. The same way that this was a magnet during this rally, this bar 51 low might end up being a magnet as well. So I think it's a less important magnet because it's a lower time frame magnet. So I think that this was an important magnet. This was not as important, but it was just a possible support area. We do also have this open gap with the bar 48 high or sorry, 47 high and the 51 low. We did not fill that in here. Obviously, we did here. So, and it's pretty interesting too. If you were a limited order bull, pretty much anywhere, limited order bull or bear, anywhere for any reason, you were able to get out with a profit on your scale ins towards the end of the day. Because even the bulls who bought below 18 scaled in lower were able to make money. Even the bears who sold the close of 42 and scaled in were able to make money on bar 79. So 64, a big bear bar. It's a breakout for the bears, but it just looks like the second leg down to me. I'm not really willing to do anything here. I think, but most of the moves for the day are done. We might have to get back to fill in the gap with yesterday's low. I did not think we were going to get to the 18 low at this point in the day, but obviously trading ranges, you can get vacuum tests. 65, a bad low one short, so I'm not willing to sell below the low one. You can see you get a reversal up 66, a bull bar closing near its high, probably buyers below 65. Maybe some sort of truncated wedge, 60, 64, 66, but probably going a little bit lower after 64. And probably not worth buying 66 unless you can use a wide stop, maybe below bar 48 or something, and look to scale in. 67, buyers below 66. 68, you can see we traded back up to the 66 close, so maybe about the close of 66 or below 66. Use 68 to get out. Bear bar 69, I don't really know if I want to do anything here. If anything, you're probably looking to buy. It's possibly a wedge. 60, 64, and 66, and 67 is pretty clear possible wedge. And 70 is a big bull bar closing near its high. Where are we going at this point once you see 70? Well, again, possible wedge, bull surprise, so good for the bulls. Maybe after this bear surprise, you could argue it's a high 2. So we're probably going at least a little bit higher, maybe back to the bar 50, 59 close, since so many straight bull bars in a doji bar. But so many straight bull bars, you'd imagine we're going to test back to that close, and we're probably going to test back to yesterday's low. Again, I thought this was a stretch, but we ended up getting there. 71, consecutive bull bars, 70, 71. An outside bar, 72, but probably buyers not too far below. This is a bad low one short. 73, high one for the bulls, really not worth doing anything. An outside bar, 74 and 75, so it's an OO pattern, outside, outside. You can buy, taking a chance that you get what we got, but if we don't start to race up really quickly here, I think a lot of traders are going to bail out of the trade. So it's an OO, but it's late in the day. Yeah, you can take a chance and buy and look to get to the 18 low, but you got to be pretty quick to make decisions. And if you bought, you probably need to scalp all of it at the bar 18 low. That's the magnet. And if it's a trading range, which it is, and if you're assuming it's a trading range correctly, that would be the magnet. And it's a big bar, big risk. So I don't know. You can do it, but it's just really not. It's not a trade of the day quality thing to do, but it's definitely very reasonable to buy above 75. 76, a bull, big bull surprise, good looking bull bar, but again, it touches all the magnets. So this is not really a buy the close bar. This is a get out of your longs at a really great price bar. 77, possibly 75, 76 bull trap. So maybe the bar 76 low, buy climax, or even 75 low, buy climax target, and then 78, and then you get just this humongous bar 79. What is this bar? I don't know. It might have something to do with the monthly chart. Tomorrow is the last day of the month, and the bear bar is looking really strong right now. So, this is an issue for the bulls, I think, on the monthly chart. And I think we're going to start some sort of correction. Like I said, I'm not sure how far down we go, but usually I would say that there's only so much the bulls can do tomorrow, because we're probably going to close relatively strong for the bears. But tomorrow is an FOMC day, and sometimes on FOMC days you end up getting a lot larger moves. So it's very possible that we just go sideways tomorrow on the FOMC. I wouldn't be surprised at all, because I think this month was going to close on its low. We're pretty overbought, and the bears need to. The bears were due for some sort of correction. So I don't know how low we go. I would imagine we're going to test the moving average at some point, but this is pretty clearly a couple of nested wedges. How far down from the high? I don't know. I think we're at least getting here. So I'd imagine we're going to get at least a 10% correction. Are we going to get to 20, which would be here? I have no idea. I just need to see what the next month looks like. But I think that next month, an important magnet. So let's assume this bar closes on near its low. Next month, if we rally back up towards the June close or the high of June, you're going to expect to see sellers and a reversal down from those areas, because the buy the close bulls on the June close are going to be disappointed with this big bear bar, and they're going to want to get out as quickly as possible. The daily chart, this is a good bar for the bears. You could argue it's some sort of wedge, 1, 2, 3. Either way, it's a really tight channel down, and that's a really large bear bar. We're probably going lower. I don't know how much lower. Again, it just depends. I wouldn't be surprised if we went a good amount lower. We're probably going to fill in this gap, like I mentioned, right here. I think we're getting back to this high. When we created this gap in June, I did say I didn't think it was going to last. We went a lot higher than I thought we were going to go, but yeah, ultimately it ends up not lasting. And the question becomes, how many gaps have to close, because we have gaps down here, right? So we have gaps here, we have gaps here, so we have all these things going on. So I don't know how much lower we're going to go. This is a really tight channel, so even if we pull back, it's going to get a second leg down, which leads me into the weekly chart. Which, if these are 3 straight, I don't know what this week is going to look like. It's only Tuesday, but if we get 3 straight bear bars closing near their lows, we'll probably pull back. But it makes me think this, if we get another solid bear bar here, this was probably the start of the trading range, and this was an extra leg up. Sometimes you get one more leg up, and we're probably going to be. I would not be surprised if we're in a trading range between 5,000 and 57, 5,800. We really didn't oscillate around 5,000 enough. You can see when we got to 4,000, that was the all-time high, I believe, right? So let's do it this way, right? So we rallied, we jumped past 4,000 oddly quickly, and then went back and we oscillated around 4,000 for like a year basically, and then we broke out and tried to test back to it again. So I would be surprised if we just test 5,000 and then rally. That would be a pretty unusual thing of the market to do. So we're probably going to find a way to oscillate around 5,000 if I had to guess. All right, that is the day.